So, let's get into today's topics. First of all, gold has officially crossed over $4,000. The path to $5,000 is not far away, and it's not speculation. It's structure. This isn't about hype or short-term sentiment. What we're seeing in financial markets, commodities, geopolitics, it's a reflection of the deep systemic changes that have been years in the making. Banks today, for instance, hold more gold than US Treasuries. You need to think about that for a moment. It tells you everything you really need to know about where confidence now resides. The global financial system is quietly but decisively prioritizing tangible value over paper promises, essentially the debt-based Ponzi scheme. So let's break this down. First of all, central banks and governments are printing money to sustain a financial system that is no longer sustainable itself. Since January of 2025, this year, the US dollar has already lost over 8.3% of its purchasing power. That's not an abstract number. This is the silent erosion of wealth in real time. Meanwhile, US Treasuries, US debt, once was considered to be a gold standard of global safety. It was treated that way. Now these treasuries are under immense pressure, and this pressure has been building for years. So essentially, the bond market, once the core of global liquidity, is now a ticking time bomb. It's a ticking liability. And that's why regulators and financial institutions have quietly reclassified gold as a Tier 1 asset class under Basel III regulations and requirements. Ladies and gentlemen, that single move alone has elevated gold to the same status as cash. Basically, zero risk. It's a quiet admission, you could say, that the foundation of fiat finance is cracking, breaking, whatever you want to call it. But it's falling apart, basically. And that's why they're trying to front-run people on this, and that's why it never made headline news. So what we're witnessing isn't just a gold rally, with gold breaking $4,000. It's basically gold being reintroduced into the monetary system, not as an investment, but as collateral. Digital integration at this point is inevitable, because this is where we're going. And this is where it gets interesting. I've been working on this for many years, trying to understand the trajectory of where the merging between gold and digital assets were going to take place. We already can confirm that the world is not going back to purely physical gold standard. It's moving towards a digital gold standard where essentially tokenized value and real physical tangible assets can coexist with each other within a programmable financial system. The World Gold Council, the International Monetary Fund, and the Bank for International Settlements, as well as the World Bank, have all confirmed the same direction, what I've been explaining for many years now. The merging of stablecoins, tokenized assets, and central bank gold reserves into a single interoperable framework. Now here is where digital assets like XRP, RLUSD come into play. In my view, I've always thought that these assets were being positioned as a bridge asset, basically giving institutions the ability to access gold-backed value without the friction, cost, or storage requirements of physical bullion. And that falls, interestingly, under Basel III requirements. They basically have it in there saying that banks need liquidity that's both compliant and real. So, what's real? Physical gold. Well, they've been buying that for a very long time. Well, what's compliant in the digital ecosystem? XRP. In fact, it's the only compliant digital asset that has went through the regulatory turmoil to turn up as a legitimate asset and not a security. Digital assets built for settlement and backed by physical tangible value offer exactly that. And I think that's the relationship between distributed ledger technology, gold, central bank gold reserves, and stablecoins. Something is still playing out, and we're cautiously and patiently waiting. So it's not really about crypto speculation anymore. It's all about integration. It's about merging traditional collateral, like gold, under new Basel III requirements with a digital liquidity instrument that can move across borders instantly and transparently. What comes to mind? XRP. Anyone that says otherwise clearly doesn't know what's going on in this ecosystem and clearly has not done the research to understand. Let me issue a quick reminder, and I've said this so many times before. Crypto alone is not going to protect your wealth. It's not going to protect real wealth. The most sophisticated players in global finance, whether it be institutions or some of the wealthiest families out there, and even the wealthiest families that Vindel and I have worked with, they don't go all in one asset class. They maintain a balance between physical assets, including gold, silver, other tangible assets, cash, a little bit of cash, and digital assets, all simultaneously working together. Money never really disappears. It moves from one place to another. If you have this three-tier strategy, like many of us in our ecosystem do, when markets move, no matter what direction, you're always in a position to profit in some way, form, or fashion, or preserve your wealth in some way, form, or fashion. Listen, real wealth is not about chasing volatility or momentum. It's about protecting the purchasing power that you've worked so hard for and trying to maintain the optionality when the system does reset. The logic is simple here. The dollar will continue to lose value because we have to keep printing it to sustain a dollar that is continuously losing value. That means treasuries and debt lose demand. When they lose demand, gold begins to regain its dominance, and digital assets bridge it all together. All you need to do is invert the dollar's purchasing power, and mathematically, you start to see the gold price going higher and higher. So gold at $5,000 or $4,000, it's just the beginning, really. We've spoken to people in 2022 who have done the math and factored in all the debt, currencies, derivatives market, you name it, and they came up with an $87,000 gold price. That's very interesting. And Trump has the executive authority to reset the gold price if necessary. Now let's talk about where all of this is heading. And this is the new architecture of value for an information age, digital. The next global financial system that's being built, it's being engineered in such a way that has layers of interoperability. And that's basically some of these other blockchain protocols we've talked about over the years. And remember, each of these blockchain protocols solves a specific problem in how money moves, how information moves, how liquidity flows, and of course, how settlement is going to occur across the world. In my opinion, XRP, XLM, and even SHX now represent those foundational layers I've been describing. Together, they form a unified ecosystem that can move value with the same speed and certainty that internet moves information. Example, let's talk about XRP. We've spoken about this many times, but XRP is a layer 1 protocol. XRP stands for Cross-Border Remittance Protocol. That is essentially institutional settlement and liquidity. So XRP is the institutional layer. It's designed to solve one of the world's oldest problems in finance, the inefficiencies of cross-border settlements. Unlike many of the speculative assets and cryptocurrencies, XRP was supposed to replace the banks, but unfortunately, through regulatory overreach, the institutions built infrastructure around XRP where it's basically being used to connect the banks to everything. Ripple built the foundation. That's what we call RippleNet. It's a global messaging and settlement network that links banks, payment providers, central banks into a settlement language, one ecosystem. Interestingly, XRP is the digital asset that they use as the settlement engine that sits upon the Ripple network, delivering on-demand liquidity without pre-funded accounts. This is huge, ladies and gentlemen. It's a game changer. In short, Ripple built the rails, XRP moves the value, and that kind of positions XRP as an institutional-grade digital reserve asset, as well as a neutral bridge for global liquidity, and you can call it the backbone of wholesale financial systems. Layer 2, very important, is XLM. This essentially is retail and global inclusion, banking the unbanked or underbanked. You've seen the motto. Now, while XRP powers institutions, XLM, Stellar Lumens, empowers people, businesses, etc. Stellar was designed to make money universally accessible. That means allowing anyone, anywhere to send, receive, and store value instantly and affordably. So this is the retail layer, connecting wallets, fintech companies, remittance platforms into global payment networks. Where XRP connects the top of the financial pyramid, XLM connects the base. That ensures value flows freely between individuals, small businesses, and emerging economies. It's the public-facing counterpart to XRP's institutional framework, and together they represent the top and the bottom of the same ecosystem. One is for scale, the other is for accessibility. And I've written a detailed explanation on this on my X account. It's labeled The Complementary Relationship Between XRP and XLM. Now, layer 3 is where it gets very interesting. And I've been studying this a lot and trying to understand it better. SHX is a liquidity and infrastructure bridge, you could say. SHX, it's important to note, was built on the Stellar network, so it falls into the same compliance that Stellar does, XLM. SHX powers the company called Stronghold, which is a regulated payment infrastructure platform that basically connects fiat currencies and digital finance through a compliant on and off ramp. I think it's important that you note, I said regulated and compliant. The future of digital money, I promise you, ladies and gentlemen, is going to be about compliance. So SHX provides the operational liquidity that is necessary to keep the system moving. It supports businesses, fintech, and stablecoin issuers, this is important, with the tools to move money across the network securely and instantly. Basically, it's a form of plumbing of the ecosystem. And SHX can connect XRP's institutional liquidity with XLM's retail accessibility under one standardized interoperable framework. So if we're to look at the system as a whole, here's how it would be structured. You have XRP as institutional settlement and liquidity, XLM as retail payments and financial inclusion, and SHX, the infrastructure bridge between fiat and crypto. 3 layers, one ecosystem, all ISO compliant, all interoperable, all moving in the same direction and towards the same destination. A unified, real-time financial internet. And I don't think this is a coincidence. This is obviously by design. As the world begins to transition from fiat to digital, and this is already happening, it's a snowball effect, it's just accelerating, there's going to be a tri-layer architecture that ensures money, whether it be physical, tokenized, or digital, can move seamlessly through this unified infrastructure. It's essentially the blueprint for a financial system that is now liquid, compliant, and inclusive. And that's kind of where XRP connects to global institutions, while XLM is empowering individuals, right? And these are their talking points. And SHX basically bridges the liquidity that binds them together. And I know for a fact that the conversation has been dominated so far by Bitcoin, Ethereum, Cardano, Solana, oh my God. But none of these technologies were built for this level of interoperability and institutional integration. Mark my words. The future of finance is not going to be about ideology. It's about infrastructure. It's about financial institutions having the trust, the speed, and the value that they need, all converging in one digital ecosystem. 3 layers, one network, one language, and that's how value is going to move in a digital age. Gold is going to hit to 5,000. That's not a forecast. It's a trend. It is being integrated back into the system as collateral. You have to understand what that means. It changes the whole dynamic of the conversation, and it confirms that gold is being reintroduced back into the monetary system. And I think it's a milestone on the path to a fully digital, asset-backed economy, asset-backed world. And that's why all these institutions are fighting for resources and commodities. And with tokenization and digital infrastructure, you can connect the two, you can bridge them.